The moment everything breaks. It never starts with chaos. It starts quietly with a single loss. A trade you planned meticulously, a setup you studied, a position you trusted, and then failure. The stop loss is hit, the screen flashes red, and a subtle tension rises inside. Not fear, not panic, but offense. A thought whispers in your mind. That wasn't fair. I did everything right. The market owes me this money back. Most traders crash at this exact moment. The loss itself isn't the danger. The reaction is. Your hands move faster, your breathing changes, your eyes stop reading charts and start staring at your P&L. Opportunity is no longer your goal. You want revenge. You double your position, skip confirmation, click buy or sell not with logic, but with anger. 5 minutes later, your account bleeds further. And just like that, you've stepped into the deadliest trap in trading: revenge trading. Welcome back to Rule Over Feeling. Today, we explore the mind that destroys even the best strategies: the emotional anatomy. Revenge trading has nothing to do with intelligence. Even highly skilled, disciplined traders fall into it. Why? Because it's not a technical error, it's an emotional reflex. When you lose money, your brain doesn't see numbers, it sees threat. Neurologically, a loss triggers the same brain regions as physical pain. Your nervous system flips a survival switch: fight or flight. Most traders instinctively choose to fight, but not the market. They fight their own sense of identity. Deep down, the loss whispers, maybe you're not as good as you think. The ego cannot tolerate that. Immediate redemption is demanded, immediate proof. The prefrontal cortex, the seat of logic and long-term planning, shuts down. The emotional brain takes over. You are no longer a trader. You're a gambler with a wounded ego. The questions change. From, is this a valid setup? To, how fast can I get this money back? The chart is irrelevant. The red number dominates, and red feels intolerable. The illusion of control. Revenge trading creates an illusion. More action equals more control. After a loss, inactivity feels weak, passive, defeated. So the mind lies. You're not being reckless, you're being decisive. But you're reacting, not responding. Pain wants relief now. This is why revenge trades feel urgent. Your heart rate rises, your vision narrows, adrenaline spikes. The market is no longer neutral, it becomes an enemy to conquer. You short into strength, you buy into weakness, you trade against trend, against structure, against logic. Not because you believe in the trade, but because you refuse to accept the loss. My breaking point. I remember the day vividly. Weeks of disciplined trading gone in 45 minutes. One stop loss hit. Frustration rose. I told myself, one quick trade to make it back. I broke all rules. No confirmation, higher leverage. Loss. Frustration grew louder. Another trade, against trend. Another loss. Within an hour, a week of profits disappeared. By the time I closed my laptop, I was empty. Lesson learned, my strategy wasn't the problem. I was. Not my knowledge, but my emotional discipline. The hard truth about lost money. Here's reality. Money you lost is gone. It doesn't exist in your account anymore. Trying to win it back is chasing a ghost. The market has no memory. It doesn't know you lost $500 this morning. Every second is neutral, independent. When you revenge trade, you are forcing meaning onto randomness. You're asking the market to apologize. Spoiler, it never does. Revenge trading destroys expectancy. You're no longer trading probabilities, you're trading emotionally weighted outcomes. Emotion has no edge. The cycle that blows accounts. Revenge trading follows a predictable loop. Loss to emotional trigger. emotional trigger to rule violation to bigger loss to panic or aggression, panic to overtrading to account damage. Most traders don't blow accounts from one bad trade. They blow accounts from one bad reaction. The tragedy isn't the loss, it's the refusal to stop. The moment you realize discipline is everything. Most traders realize too late that the market doesn't care about their emotions. You lose and you want revenge. The market doesn't know, it doesn't care. I remember sitting at my desk, staring at the red numbers, my chest tight. For years, I thought my strategy would save me. I thought my indicators, my charts, my setups would protect me from emotional mistakes. But no strategy can, no indicator can. Because the enemy isn't the market. The enemy is yourself. Your brain, flooded with adrenaline, sees loss as attack. It wants to fight back. It wants to prove its worth. This is the harshest reality of trading. The market doesn't reward skill if your emotions are untrained. Building emotional circuit breakers. To stop revenge trading, I had to create automatic defenses. I call them emotional circuit breakers. These rules are non-negotiable, no matter how tempting the charts look. Rule 1. The 2-loss limit. 2 consecutive stop losses in one session and I am done. I close the platform, lock the computer, walk away. No exceptions, no perfect setup, no excuses. The logic is simple. After 2 losses, your brain is compromised. Your decisions are no longer rational. You are trading emotion, not probability. Many traders think they can control it, but control is an illusion when adrenaline spikes. Trust the rule, it saves accounts. Rule 2, the mandatory cool down. After any loss, never trade immediately. 30 minutes minimum. Walk, breathe, drink water, detach from the screen. If the urge to win it back persists, you are not ready to trade. This rule teaches patience. It teaches your emotional brain that loss is temporary, not catastrophic. It interrupts the reflex loop that turns frustration into revenge. Rule 3. Shift your goal from profit to process. Before this, I graded my day by money. Win money equals good day. Lose money equals bad day. This is a trap. Now I grade by rule adherence. A losing day with perfect execution is success. A winning day fueled by revenge is failure. This shift changes your perception of the market. It removes ego from the equation. It rewards discipline over luck. Real examples from my trading. Example 1. I once lost $800 in one scalp attempt. My old instinct, double size, get it back. Instead, I followed Rule 2, cool down. Walked for 45 minutes, came back, took a completely unrelated trade later that was perfect. Profit regained calmly without emotional overreach. Example 2. A friend of mine blew $5,000 in one afternoon. He didn't have circuit breakers. He thought he could control it. 2 days later, his account was empty. Lesson: discipline is the real edge. Capital preservation matters more than any indicator. Understanding the emotional triggers. Why do we revenge trade? Because of pain, ego, and illusion of control. Pain. Losing money activates the same brain regions as physical harm. Ego. Loss feels like a personal attack. Illusion of control. We believe more action equals more control. The mind tells you you're decisive, you're smart, you'll get it back. But in reality, you are reacting, not thinking. Recognizing these triggers is the first step to defeating them. The psychology of a professional trader. A professional trader is not someone who never loses. A professional trader is someone who stops when rules say stop, takes losses calmly, protects capital over chasing ego, measures success by process, not money. This mindset separates amateurs from professionals. Revenge trading is instant gratification. Discipline is long-term wealth. You must choose which path you want. Practical steps to implement the rule over feeling protocol. Here's the full protocol I follow. 2 loss limit. Mandatory break after 2 consecutive stop losses. Mandatory cool down. Minimum 30-minute pause after a loss. Process over profit. Grade success by rules followed, not money earned. Pre-trade checklist. Before every trade, check, am I calm? Is this trade valid according to my plan? Am I emotionally neutral? Trading journal. Record every trade and the emotions you felt. Weekly review. Assess your discipline, not profits. Reward adherence. These steps remove ego from trading. They protect your account from your own mind. The long-term mindset. The market will always be here. It doesn't care about your losses. It doesn't remember your profits. But your capital can disappear. Once it's gone, no strategy can recover it easily. Long-term trading is a marathon, not a sprint. Protect capital. Stick to rules. Train your mind. Let the market do its work. Revenge trading is a shortcut to disaster. Discipline is the long road to consistent wealth. The science of emotional control. To master revenge trading, you must first master your brain. Our minds are wired for instant response. Loss triggers the amygdala, the emotional center. The prefrontal cortex, responsible for logic and decision-making, shuts down under stress. This is why even experienced traders make irrational trades after a loss. The first step to control is awareness. Notice the physical signs of stress: increased heart rate, shallow breathing, tight chest. Recognize emotional urges: I must win it back, or I can't lose again. Name the feeling: frustration, anger, or fear. Naming the emotion activates your prefrontal cortex, giving you a moment to pause before acting. Techniques to stop revenge trading. Technique 1, the physical reset. Physical movement interrupts emotional escalation. Stand up, stretch, or walk. Deep breathing. Inhale for 4 seconds, hold 2 seconds, exhale 6 seconds. Cold water on your face can also reset your nervous system. These small acts send signals to your brain: I am safe, I can wait, I can think clearly. Technique 2, visualization of loss. Before trading, visualize possible losses, the emotional reaction they may trigger, how you will respond without revenge trading. This trains your mind to accept losses calmly. It reduces surprise and emotional spikes when they occur. Technique 3, micro reviews. After every trade, note what triggered the trade decision, your emotional state, if rules were followed. Even a 1-minute journal entry strengthens discipline. Patterns emerge: I revenge trade when tired, or I double size after frustration. Awareness is prevention. Handling streaks of losses. Even with strict rules, losing streaks happen. Here's how to survive them without revenge. Shrink position size, reduce risk until emotions normalize. Take a full break, a day or 2 away from screens restores clarity. Focus on process, not P&L. Your goal is correct execution, not money earned. Reflect, don't react. Review trades after emotions cool, not during. Remember, streaks are normal. Revenge trading is optional. Rewiring your brain for discipline. Neuroplasticity allows your brain to learn new patterns. With consistent practice, emotional reflexes weaken. Repetition. Follow rules daily, even when profitable. Reward discipline. Celebrate calm execution, not profit. Anchor rules. Repeat phrases like I trade rules, not revenge, to reinforce mindset. Mindfulness practice, meditation, or short daily sessions improve emotional awareness. Over time, your brain learns loss equals temporary, rules equals constant, emotion equals controlled. Case studies of transformation. Case 1, from chaos to calm. A trader friend of mine lost $1,200 in 1 day. Before rule over feeling, he revenge traded. By the end of the week, his account was near zero.
After applying the protocol, 2-loss limit, cool-down periods, process over profit, he began recording emotional triggers and following rules. Within 3 months, he stopped revenge trading completely. Account growth stabilized. Case 2. Emotional awareness wins. I personally experienced a 3-day losing streak. Instead of doubling positions, I reduced size and reviewed my journal. No revenge trades were made. On the 4th day, I executed a perfect setup calmly and regained profits without stress. These are not exceptions, they are proof that emotional discipline beats impulse every time. The rule over feeling mindset. Rule over feeling is more than a protocol, it's a philosophy. The market is neutral. Loss is inevitable. Revenge trading is a choice, not necessity. Discipline is the trader's true edge. Long-term capital preservation is more important than short-term ego. A professional trader asks, "Am I following my rules?" Not, "Am I making money right now?" Discipline is slow, quiet, and boring, but it builds wealth steadily. Revenge trading is loud, fast, and destructive. It destroys accounts in minutes. You must decide which path to follow. Daily practices for long-term success. Pre-market routine, review rules, visualize trades, check emotional state. Trade journal, record every trade and emotional triggers. End-of-day reflection, analyze adherence to process, not profits. Weekly review, identify patterns, adjust rules if necessary. Physical care, sleep, exercise, hydration. Stress amplifies revenge urges. Consistency in these practices rewires your brain. They make discipline automatic, reducing emotional spikes. Final words before conclusion. Trading is not a battle of indicators, it's a battle of the mind and self-control. Revenge trading is the enemy of every trader, the fastest way to destroy your account, the silent killer of confidence and consistency. But the rule over feeling mindset is your shield. Protect your capital, follow your rules, master your emotions. Your edge in trading is not your chart analysis, not your strategy, it's your ability to remain calm when losses occur. If you've ever felt the urge to revenge trade, you are human. The difference between amateurs and professionals is control over emotion. Stop when rules say stop. Take breaks. Follow your process. Preserve your capital. If this video helped you recognize the trap, like, subscribe, and share your experience below. Stay disciplined. Stay patient.